Welcome back, traders and investors. We have Nate Tobik on the line, and he is an investor and founder of CompleteBankData.com. Nate, how you doing this morning?
Good, doing well. Thanks for having me on again.
No, our pleasure. Tell us about your website.
Complete Bank Data is we provide powerful tools for individuals and financial institutions to research, find great investment ideas, and so that's at CompleteBankData.com.
Okay. All right. So we got an IPO coming, I believe, tomorrow. Citizens Bank. The symbol is going to be
C
CFG.
CFG,
Boy, oh
yes.
boy, when is the last time we had an IPO in a bank?
It's been a while, and this is going to be, from what I've seen, they're saying potentially one of the biggest IPOs of the year. So even bigger than the Alibaba IPO, and this is banks have kind of been pushed down for years, really since 2008. So this is I think they said it's the biggest bank IPO since Goldman Sachs in '99. So this is going to be a fairly big deal. Um, what's happening is the Royal Bank of Scotland owns Citizens Bank, and Citizens Bank it's a $130 billion retail bank on the East Coast. Then they spread out to the Midwest. And Royal Bank of Scotland, they got in some trouble back in the financial crisis, like most banks, and the UK government ended up bailing them out and purchasing a giant stake in them. So they're effectively owned by the UK government, and so uh, the UK wants their money back, and so RBS is IPOing 25% of the bank, and then the proceeds from that are going to go back to the UK. So uh, the shareholders aren't going to get anything in this IPO, but they will gain some independence. And I think this is going to be good for the bank. The pricing, it's going to be priced later today and then start trading tomorrow. So they're pricing the bank at a bit of a discount to peers, and it's going to come out at about 1 times tangible book, which is that's a fairly good price. It's about 80% a book. There's some goodwill on the balance sheet, and a lot of the narrative around this discount is that the bank isn't as great of a performer. They've only earned about 4 or 5 times, um, 4 to 5% on their equity, and they're not growing that well. And those I agree with that, except that I think what investors are going to get here is Citizens is going to be a little bit like a spinoff. So you've got a CEO who's now motivated. The bank's going to be partially owned by shareholders, and they're going to work to increase profitability. They're going to start to grow. He said he wants to double ROE over the next couple years. If that happens, there's no way this is going to be trading at 1 times tangible book.
So, are you gonna participate in this? Is it something? Do you like to have things open up and trade for a few days and see the trading activity? Are you getting any stock? Being an investor, how you gonna handle this IPO?
Yeah, so what I'll do is I'll probably sit back and wait for a few days. I want to see where things go. It's the I would be surprised if this rises much after the open. So I have a feeling that investors are going to be able to purchase this at the IPO price or maybe even below in a couple days, and it's worth waiting for that.
Okay, so you like to see the dust settle. Well, let's talk about this recent move in the financials here, just showing incredible relative strength as the market has come off that quad wedge expiration. Let's just go like to the big gun here. Goldman Sachs. Does this fit your bank, or is this too much in the investment bank arena for you to follow?
Well, so fundamentally, that in the financial crisis, Goldman, Morgan Stanley, they all became bank holding companies. So they're regulated like banks, but most of their revenue is not banking revenue. So it's not the deposits, taking in deposits, making loans. Even commercial banking is a far cry from what Goldman's doing. So a lot of what Goldman makes a lot of their money from their trading, from their products. It's kind of a hedge fund and a big fancy building, and then they're um, doing the stock dealing and all that. But I think a lot of times the big banks are lumped with the smaller banks, and everything runs together. And so when you get a good run in some of the larger names, that's that rising tide that lifts all boats. So it's not terrible for those of us who are investing in more retail banks, commercial banks, and smaller banks. Um, as to the sustainability of it, I don't know that the markets, it keeps rising, and you need to ask, like, when's it going to stop? Just keeps going.
Over the weekends, Barron's did a piece on Bank America, and basically what they were saying was that over the last 3 years, they've spent $65 billion in litigation and restitution costs, a huge drain on their earnings. And they kind of felt that that is kind of behind them now. And they were talking about, a steady earning stream, not very volatile solid trading revenues. They talked about a 50% upside in the stock. What's your take on that?
Yeah, I think that's reasonable. And so the Bank of America has had bad news for years, and they've spent the money on the litigation, and I think a lot of that's finally it's behind them, and they're back to their business, and which they're focused on banking. They also have the Merrill Lynch, so they have some of the trading revenue as well, and the let's face it, this bank is giant. They have the scale, and as long as they don't mess up, they're going to be profitable. And I think they could easily trade up 50%. That's not unheard of, and it's a momentum thing. Now that the balance sheet's cleaned up, now that their issues are cleaned up, if they just don't stumble, they're going to start to produce quite an earnings stream.
We've had a debate with some of our other guests over the past few weeks about rising interest rates and whether that's a positive or negative for banks. I mean, I think it's obviously a positive because the rates that they're paying out to their clients on savings accounts is lower than what their loaning out rate. Well, what's your take on rising interest rates for banks?
Right. This is a great point. So I saw a quote recently that said that all banks think that when rates rise, it'll be good for them. So I've seen in reports and heard from bankers, once rates rise, then we're going to just be gushing profits. And what's lost in that is a lot of bankers they aren't as aware of how this is going to affect their loan book. So they think they aren't sensitive to rising rates, and they are. And so some banks who have positioned themselves very short term with their loan books. I was looking at a bank recently. They anything less than 10 years, they keep on their books. Anything more than 10 years, they're selling to the Federal Home Loan Bank, and they've tried to lock in deposits, and so they're positioned for rising rates. They've had a couple years of mediocre profits because they've been waiting for this imminent rate rise. And so I think what's going to happen is there's going to be some banks that are going to do well, and they are going to start to make money. And I think there's a lot of other banks, and this is the danger, that the bank and the management thinks they're going to do well, but they're actually going to be caught in the storm, and they're going to have some funding problems because people want their deposit rates to go up. And we've had, was it 6 years now, where we've had no interest on deposits. And the second those rates start to tick up, it's going to be, a feeding frenzy for the higher rates. And I think there's going to be a little bit of a, race to the bottom, and who could offer better deposit rates to get those deposits.
And so you mentioned interest rates here, and looks like Janet Yellen really kind of did the two-step again last week. Could you give us your short-term and long-term outlook for interest rates?
Yeah, so I'm not good at predictions like this. I think what we're going to eventually see rates rise. I saw some literature saying that a good estimate might be to 1.5% over the next year, and I my gut feel is that that might be optimistic, and it might be a little lower than that. So at this point, I don't think the Fed wants to really rock the boat. They want to really baby step into this thing, and so I think it's going to be a lot slower and a lot more drawn out than maybe what some people expect.
A bank, take a look at a chart of like Wells Fargo here, and that stock survived the financial crisis and one of the few banks to come back and make a new all-time high by quite a bit in the market. I mean, do you attribute that to just them kind of staying out of the whole loan debacle, or what do you think's the reason for this continued strength in Wells Fargo?
Yeah, so I think there's really two things for them. They missed out on the whole loan debacle, so they have that going for them. And then I think they also have the Warren Buffett seal of approval, and that's an intangible that really can't be measured. But he says he loves the bank. He wish he would have bought more of it. And when people hear that, they think it's like they turn off their brain and they think if Buffett likes it, then I must like it. And so that's that giant stamp of approval. And so regardless of how great of a bank they really are compared to some others, I think they're going to do well because they have that backing.
That Warren stamp of approval. So
Yeah.
before we let you go, I mean, some of these financials have taken off, and they're kind of showing some green today, even though the market is a little bit down here. Is there any other value banks out there, value stocks? With the market at all-time highs, it gets tougher and tougher to find value in this market. Is there anything that we could bring a chart up and get your take on?
Yeah, I mean, I have some. So one area where I think is hot, and I don't know if there's many charts to pull up on this, is there's a lot of M&A activity for banks under 100 million in assets. So these are microscopic market caps on these things, but a lot of them are trading really cheap. So I think one would be like Indiana Business Bank. I think it's IBBI maybe.
Okay.
Um, yeah, IBBI. I mean, it's a tiny little bank,
Thin. Yep. Yep.
um, but there's a lot of names like this is what's still cheap. So they're at 60 some% of tangible book. It's most likely an acquirer is going to come along for a bank like them and buy them out at maybe book value, and so shareholders might see a 50% return. And so what I would recommend is if anyone's interested in these smaller banks, not to find the one or two best banks, but to just to diversify. So buy maybe 10 or 15 small banks that are all trading at 80% of book value or less, and just kind of evenly spread your bets and sit back and wait. So that's the best way to play, um, you know, this rally here.
Looks like you're taking a page out of Tim Malvin's book of the Deep Value Letter. Are you familiar with any of his work? He likes to buy some of these banks that trade by appointment only as well.
Yes.
But
Yep.
yep, he's looking for value. So let's go to undervalued real quickly before you let you go. Overvalued. Is there any stocks here after the recent run that you're seeing are overvalued in the banking sector?
That's a good question. I haven't really spent much time looking at the overvalued. I guess if I could just a heuristic or something would be, I would say, um, really want to look at a bank that, if they're a lot of times what investors get caught up in is something trading with a say 15% return on equity. Um, that's very rare in today's world. So they're going to bid that up for a few times a book value. I would say maybe just make sure you're not getting ahead of yourself and price in a potentially negative scenario. So what happens if rates do rise fast? You know, you don't want to be caught there with that bank sliding 30 or 40% because their loans didn't quite reprice as fast as their deposits did. But yeah, I haven't spent as much time on the overvalued stuff. Not much of a shorter.
Okay. Any just general market thoughts here? We've pulled off the all-time highs in the quad witch. Just another pullback to buy in the market.
Yeah, I haven't been buying as much in the U.S. I do a significant amount of investing outside of banks, and I've been finding a lot of value in international stocks. So some smaller cap stuff in France is good. There's a lot of smaller cap stuff in Australia that's still attractively priced. Um, so as the U.S. goes higher, I've started to scale back on the U.S. and scale into some of these other markets.
And do you post data on those banks as well on your site?
I don't. I don't have data on international banks. That's a lot harder to come by. So this is one fascinating trade for anyone who is interested. And so there's a Credit Agricole, which is a French bank, and it's owned by its regional banks. There's regional Credit Agricole banks. So a lot of these regional banks are trading at about 50% of book value, maybe 5 times earnings, and they've all been paying 5 to 10% dividends over the past couple of years. And um, Credit Agricole got in a lot of problems in Europe, and these regional banks did not. So they're making loans to farmers in small French towns, and they're mutually owned. So it's like a mutual holding company in the U.S. And so if these a lot of times these banks will demutualize and then they get sold out. And so I think there's about 12 of the public Credit Agricole banks. Information's hard to get. It's all in French. So
Yeah.
that's a, you have to have this niche. You need to know banks. You need to read French, and you have to be willing to invest in these things. But it's a very interesting trade, and I think someone who puts money in each of the 12 will probably uh, greatly beat the market over time.
It's all French to me too, Nate. Thanks a lot
Yeah,
for coming on.
thanks
Nate
for having me.
Tobik, investor and founder of CompleteBankData.com, giving us his outlook on banks and interest rates. Thanks a lot for coming on, Nate. We'd like to have you on again.
Thank you very much.